Some economic data in America. Let's turn to Mike McKee for that. The wrong kind of upside surprise on jobless claims, Mike.
Although not much of one, John. It's about a 2,000 increase over the prior week because that was revised higher to 371,000. 373,000 jobless claims filed last week. That's more than the survey of 350,000, but we're still at much lower levels than we were during the pandemic, of course. The average of the 5 years before that was 230,000. So we're getting there. It's just taking longer. The real question is not so much the initial claims that are being filed, but the continuing claims now, and that's at 14,209,000. That's the number you want to see come down as people move out of the labor force or move into the labor force and try to get jobs. So we're keeping an eye on that. And some of the states where we saw them end the unemployment benefits early, both Alaska and Iowa, which ended theirs a couple of weeks ago, saw jobless claims drop during the month. But Mississippi saw jobless claims drop by 8,000, and New Hampshire saw jobless claims rise by 3,000. So is there evidence that we're seeing people go back into jobs because they can't get extended benefits? Not conclusive yet.
Well, there's a weekly data point. Michael McKee, I want you to save us here this morning as we look at the yield market and the equity markets and the worry about the trajectory of growth. Forget about the Fed. When you read all the market strategists out there, the market economists out there, we talk about a boom economy and then a sort of boom economy and then not a gloom economy, but what we used to know. How has that timeline changed in the last number of weeks of the research you've read?
Well, it hasn't particularly changed. The psychology changes, and that's the difference maybe between the Fed and the markets. If you're the Fed, you could afford to wait. You could afford to say at your meeting that we don't know what's going to happen with inflation and unemployment. We think we have a theory, but it's going to take months to prove whether we're right or not. But if you're an investor, you've got to trade on a daily basis, and so you're trading the psychology of the moment. And the psychology of the moment is the Delta variant is getting established in a lot of places, and maybe that's going to have an impact. But again, we don't know at this point.
When we look at the continuing claims here and the trend line that we've been seeing there, Mike, it doesn't seem that it's come down a great deal over the last couple of reports here. And I'm wondering, at what point do you start to be a little bit concerned about that?
Well, that's the question for the Fed. And while we say jobless claims aren't related to payrolls in a direct way, they do have sort of a relationship in terms of where people are in the labor market. And we're not seeing people getting jobs at the rate that we want to, and we're seeing this elevated level of claims. And so they should move together. Claims should start coming down as more people come into the labor force and get jobs. But that may, at least according to Fed thinking and a lot of economists, that may not happen until the fall, when schools reopen, when the extended unemployment benefits expire for everybody, and people are forced into or able to get jobs. So that's something that's something we want to keep an eye on. And as these extended unemployment benefits end in a lot of states, that should also push that number down. But does it push it down a lot before September? That's the question.